Robert Kiyosaki is a personal finance guru who has been vocally critical of federal stimulus programs and warning of a historic market bubble and encouraging investors to hoard Bitcoin, gold, and silver for several months. Let's have a look at Robert Kiyosaki's warning. How can you defend yourself against the assertions that Robert Kiyosaki makes, as well as what he means when he says that rapid inflation would take out half of the US population? Because there has been no abatement in the rate of inflation, the Federal Reserve has given up using the term transitory to describe it. This is due to the fact that price increases have continued. This could provide an additional incentive for the Federal Reserve to continue with its policy of raising interest rates, which is already putting a significant amount of pressure on the stock market. Alternatively stated, this could provide an additional incentive for the Federal Reserve to continue with its policy of raising interest rates. The following quotation was shared with the employees of Stansberry Research by him a little earlier this month. "When inflation rises, we'll wipe out half of the US population." The United States of America is no longer in the business of producing goods. Instead, we are in the business of producing bubbles. He continues, noting that bubbles can be found in the real estate, stock, and bond markets. According to Kiyosaki, the decline in the stock market will occur at the same time as the bursting of the bubbles that exist in the economy. This assertion can be found in the book Rich Dad, Poor Dad. Robert Kiyosaki believes that the biggest depression ever may have begun. Kiyosaki was a guest on episode number 263 of the Pomp podcast, hosted by Anthony Pompliano, which was released on April 7, 2021. The episode featured an interview with Kiyosaki. Pompliano asked Kiyosaki a question about assets that are considered traditional inflation hedges during their conversation. It is still very early for Solana, and even though there is a possibility, it is extremely unlikely. Kiyosaki issued a stern warning in a tweet that he sent out on April 25th. In the tweet, he stated that the world's financial markets were about to witness the most catastrophic economic collapse in the history of humankind. Kiyosaki expressed concern regarding the current state of the markets, giving the impression that the majority of the world's most important financial markets are experiencing bubble conditions. This gave the impression that the current state of the markets is a cause for concern. He predicted that conditions would rapidly deteriorate into an everything bust, which would usher in the beginning of a significant economic downturn. He also predicted that the economy would begin to contract. The author of the book Rich Dad, Poor Dad issued a warning about a month ago that the currency of the United States would soon fail, and he encouraged investors to purchase gold, silver, Bitcoin, Ethereum, and Solana instead. This warning was issued in conjunction with the publication of the book Rich Dad, Poor Dad. Robert Kiyosaki, author of the international best-selling book Rich Dad, Poor Dad, is of the opinion that hyperinflation and hopelessness have already arrived. His book has sold millions of copies all over the world. Robert Kiyosaki, the author of the book Rich Dad, Poor Dad, issued a series of warnings about the current state of the economy on Friday. Rich Dad, Poor Dad was a book that was written by Robert Kiyosaki and Sharon Lechter in 1997, and it was published under the title Robert Kiyosaki, Rich Dad, Poor Dad. The author of Rich Dad, Poor Dad makes a supposition that the baby boomer generation will soon enter retirement, and that the $10 trillion that is being spent using counterfeit money will eventually come to an end. Both of these events are hypothesized to occur in the near future. According to Kiyosaki, a significant economic downturn could be brought on by a combination of factors, one of which is the expanding debt levels around the world, as well as the increased geopolitical tensions between Russia and Ukraine. Moreover, Kiyosaki believes that this downturn could be brought on by a combination of factors. As a result of his pessimistic outlook on the value of the currency, he has a favorable attitude toward precious metals and cryptocurrencies such as Bitcoin. The Daily Hodl is not an investment advisor and does not recommend, encourage, or provide any other forms of guidance regarding the purchase or sale of any cryptocurrencies or digital assets. Additionally, the Daily Hodl does not provide any information regarding the price of any cryptocurrencies or digital assets. The fact that the Daily Hodl engages in activities connected to affiliate marketing has been brought to our attention. Here are Kiyosaki's best quotes from the interview. 1. The upcoming collision is similar to an avalanche that is just waiting for the final snowflake to fall. Since 2008, the only thing that the federal government has been doing is piling more debt onto the mountainside, and at this point, They're just waiting for the next snowflake to hit. It is going to be the most catastrophic crash in the history of the world. The snowflake analogy was sourced from Currency Wars, a book written by economist and author Jim Rickards. Kiyosaki gave credit to Rickards. 2. They indoctrinate you to the idea that you should get an education, find a job, and labor for this rubbish. The only thing I can think to compare this garbage to is gold, silver, and Bitcoin, arguing that commodities such as gold, silver, and Bitcoin will retain much more of their value, and predicting that the United States dollar will become as worthless as the Zimbabwean dollar. 3. What will happen to the financial system when the yuan is converted into cryptocurrency, when the dollar is converted into cryptocurrency, or when the Fed coin is introduced? That is the most significant question you could possibly ask at this time. A discussion regarding the potential effects that digital currencies issued by central banks could have. 4. Construct a company that can thrive despite the ups and downs of the economy. It is not beneficial for young people to work while they are also attending school. They need to develop an entrepreneurial spirit, become investors, and found companies that will provide employment opportunities. 5. It's not that I agree or disagree with the idea of having a stock portfolio. Rather, I'm pointing out that there are other options. Just throw open your blinders and take a look around. The rich are only getting richer. Economists and strategists' opinion. Many financial experts and strategists are of the opinion that the Federal Reserve will not make a policy shift in the near future. Friday, at Reuters Global Market Forum, strategists and fund managers stated that a pivot by the Federal Reserve is not in the cards, despite the fact that over-tightening risks are on the horizon. They are of the opinion that the probability of the Federal Reserve raising interest rates to an excessive degree and thereby pushing the economy of the United States into a recession is increasing. In a note published on Friday, the strategists at Bank of America, led by Michael Hartnett, stated that it is too early for the Federal Reserve to make a policy pivot absent sudden collapse in inflation and payrolls. Given the continuation of inflation, J.P. Morgan strategist Julia Wang stated on Thursday that it is unlikely that the Federal Reserve will change course in the near future. She stated the following to Bloomberg: "We think it will probably take us until the end of next year to get to a point where labor market conditions are more fundamentally consistent with the Federal Reserve's inflation target. Because of this, we don't anticipate a significant shift in direction until 2023 at the earliest." This is not the first time that the renowned author has made the assertion that increases in Federal Reserve funds rates will bring the economy of the United States to its knees. In September, he issued a warning that was very similar. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.